one would think coming out of it, there are going to be some great commodities. Copper is in the tightest position, well, frankly, I've ever even studied. I'm actually afraid to have a meaningful position in it at this point as we approach the hard landing, only because I'm not an idiot and I know what would happen to the cyclical factors as a hard landing starts. But coming out of it, given the move toward EVs, given the usefulness of it in infrastructure spending, which I think a lot of government policies will try and encourage on their way out, it's hard to believe copper won't be a huge beneficiary. The question is, when am I supposed to buy it and how big is the exposure? And a lot of how big I would get a position like that, again, will be policymakers' response if we even get a hard landing. This isn't a foregone conclusion. As I said earlier, this is not an easy place to forecast. The other interesting place is the U.S. housing industry, because housing has obviously gone down dramatically given the 500 basis point increase in interest rates. But we, unlike 07, 08, we actually have a structural shortage in single family homes going into this. So if things got bad enough, I could actually see housing, which is about the last thing you would think of intuitively, could be a big beneficiary on the way out. And then I would say there's always growth, and this is really hard to figure out which names, but biotech has been a big underperformer in the last 3 to 5 years. And there are tremendous things going on in cancer and other areas. There was an article, I guess it was in The Economist last weekend, about new viral drugs using viruses to conquer bacteria. So that would be a fruitful area. And then, of course, there's AI. I would hope that I haven't been one to buy into fads historically. I played some Bitcoin at the bottom, but never really got too worked up about blockchain. I did buy the top in 2000 in an emotional moment in the tech bubble after having sold it. But I actually think the AI thing is very, very real and could be every bit as impactful as the internet, literally, going forward. And it could be a beautiful opportunity in a hard landing, just like 01, 02 were a beautiful opportunity when the tech bubble burst, going forward for companies who would benefit from the internet. AI could be there. It's funny, my firm has only been able to participate in AI by owning NVIDIA and Microsoft. And it's not even clear to me, and this is kind of out there, Carol, but it's not even clear to me if we had a really bad recession that NVIDIA would even go down. It's kind of a stupid statement given the multiple on it. But if they bought staples historically in recessions, why wouldn't they buy a company that's obviously going to grow very rapidly? So those are just some interesting thoughts. I mean, we own gold and silver right now. They historically have not done well in hard landings, but given it looks to me like the monetary and the fiscal authorities are kind of at the end of their rope. And given the fact that other countries have decided, particularly autocracies, not to hold their reserves in dollars, I'm betting for the time being against the history of the performance of gold in hard landings. Could be wrong, and then don't go out and buy gold. I could change my mind in a week or two, folks, but those are just some thoughts to a very hard question. I would say the most important answer I give that is keep an open mind and see how the authorities react to this over the 6 to 9 months, because they could give you very different outcomes. But be open-minded to your question.